Hey guys, do you want to know how to buy your first rental property and do it right? Well, for me, this property was property number one. And after that, it's 200 plus and counting. And you know, in the last 10 years, I've helped people buy over 18,000 deals exactly like this one. Today, we're going to show you the 5 steps you have to know when you're buying your first rental property. Before we get in the studio and talk about rentals, I want to show you guys something. Look at this, right? These are about 800 some rentals right here on the wall. We call this like the wall of fame. And we're about 18,000 more. And you know what happens is, I thought I'd show you guys a quick glimpse. So this is kind of our, the training room, if you want to call it, right? So everybody comes here. So if you're in the Chicagoland area and you can make it to our office, come visit one of the RIA meetings. But I just thought I'd show you guys kind of what it all looks like and what is possible. So let's get back in the studio and we'll get started. Hey guys, so you want to buy your first rental property? Well, let's get started. So the first thing we're going to talk about is, what is a good rental property? Well, a good rental property is something that creates cash flow every single month, meaning it puts money in your pocket, and that it has equity, meaning on the front end when you buy, you're not paying retail for the property. So what do we mean by cash flow? Well, it's very simple. Imagine the rental property every single month, your PITI, principal, interest, tax, and insurance, costs you $1,450 every single month. And the rent that you're collecting on it is about $1,900 or $2,000. Well, what do you make every single month? So if your rent is about $2,000, costs you $1,450, every single month you're making $550. So the right number to look at in terms of cash flow is going to be somewhere from $300 to about $500 to $600, depending on the market you're in. And even in a market as competitive as Chicago suburbs, as well as in the Florida market, which is one of the hottest markets, we're able to do that every single day. So never buy a property where you're like, oh my God, I'm okay because I just break even. Guys, that is not a good investment. The second part of investing is buying a property with equity. What do I mean by equity? Well, if you bought the property for $120 and then you did $30,000 in work, your all-in cost is $150,000 in that property, and then you would like to have about 25 to 30% equity in that property, meaning what is that property worth? If you buy a property for $150 and it's worth $150, well, that's not investing, that's just paying retail. So first was cash flow, second was equity. Now, the next thing to consider is, well, what should I buy, Andrew? Should I buy a single family? Should I buy a 2-unit, 3-unit? Or I would love to be able to scale up and buy a big apartment building. Guys, before you're going to become a champion at the marathon, right? A marathon runner, you got to get off the couch and walk the first mile. What I'm trying to say is this, that single family properties, 2-unit properties, 3-unit properties, they're the easiest to get into. And if you're buying your first property, start there, because the easiest way to get to $5,000 net income every single month, buying smaller properties, because there are thousands of them, right? And guess what? They're all around the country, and there are a lot more smaller deals that you can find, and they're very easy to get into. If you haven't watched our other videos on how do you do your first house hack or how do you buy your property zero money down, make sure you watch those videos because we have them available for free. Next, we're going to talk about is the location. What is the perfect location for your first rental? Real estate, you've heard, is all about location, location, location. And for rentals, it's no different, and this relates to if you want to be a successful landlord. It's not buying the cheapest properties and it's never buying the most expensive properties. It's that middle sweet spot. Because if you go to areas that have the cheapest properties, guess what? You're going to have tenants that have a lot of challenges in their life. They live in challenging properties and they do challenging things. That's right, you heard me correctly, that you don't want to buy junky properties, because guess what? It's a lot of headaches in those properties. The expensive properties, they won't cash flow as much because you can't make as much money, because relative to the price, you don't get the highest rent. So what are you looking for? You're looking for a yield curve. Where is that bell curve? Where's the high point of that bell curve where relative to the price of the property, you're going to get relatively the highest amount of rent? So you have 4 types of areas. D area, right, is going to be a disaster area. Think about it that way. A area is going to be the affluent or aspirational area, the good schools, the great malls, great shopping, right? Easy. What you're looking for is areas that are next to it, generally B, meaning bread or butter, or areas that have some challenges. Those areas generally, and this exists around every single city in the United States. If it's a small city, if it's a different city, in the rural areas, it's going to look a little bit different. In areas where, if you're in big metro populations like we are here in Chicago, or like we invest in the Florida market, they may look a little bit different, but you're looking for everyday bread and butter type of properties. 2 bedrooms, ideally 3 bedrooms, 1 bath, 1.5 baths, depending on what is common for that area. Generally, properties anywhere from 70, 80,000 all the way to about 200 to 300,000. Generally, that's going to be the price range that you're going to be in for location. Remember, a bad location is going to attract tenants that have a lot of challenges. A good, decent location are going to attract everyday people that are going to be great tenants for you. So as Jerry says in that movie, show me the money! So now let me show you the money as it relates to a rental property. See, there's 2 ways of buying a rental property. You can buy it the traditional way, which is lots of dollar signs, meaning you have to come up with, $30,000, $40,000, $50,000 if you're going to buy a $200,000 house. So this is that traditional style of 20 to 25% down. See, most people end up doing this when they buy a rental property because they don't know how else to buy a rental property. Well, we do what is called a BRRRR strategy, which you've all heard of probably, which is you buy a property, you rehab a property, you rent the property out, you refinance it, and you repeat it. But here's one better. We call it a 2-5-7 strategy. What does that mean? In 2 years, we buy 5 houses, get them all paid off in 7. You heard me correctly. 2 years, 5 houses, get them all paid off in 7. We're going to put a link in the description to the video. So make sure you watch that because I just don't have the time to go into the details of that strategy. But that's the best strategy because that's going to accomplish all the things we're talking about in this particular video. So there, what you're doing is you're buying a property that needs a little bit of work, meaning it's a value add property. You're doing about, say, $30,000 or so in work. Your all-in cost is $150,000. The best part is this. You're not buying this with your own money. You're buying this with either hedge fund or private money. And then you're refinancing the property because the property is going to appraise for much, much more, which is it appraises somewhere around, 180, 185, 200, 210. And then you do a recycle of the money. We call it the 100% recycle. So when it comes to money, you have 2 strategies. Either the 20%, which is the old school, or you do it this way, which this helps you build scale. So the next thing comes up is, oh my God, Andrew, what about the interest rates as we record this video, right? The interest rates in the market are high. Well, guess what? Right? It's a yin and a yang, guys. When the market rates, meaning the interest rates are low, guess what happens? A lot of multiple offers in the market, what we've seen for the last 2 or 3 years, right? People are willing to pay crazy prices. Well, when the interest rates shoot up, guess what happens? A lot of deals start coming to the market. It's not really about the rate, it's about your investment. Meaning, can you still put money in your pocket? See, if the deal still puts money in your pocket, even with today's interest rates, it's a good deal. Are you going to focus on what the rates are? None of us can do anything about the rates, but yet you have to focus on the deals. So the higher the interest rates, the more of a discount that you're going to negotiate with the seller. So don't focus on the rates, focus on how much money goes in your pocket, because guess what happens when the rate comes down? Well, you're going to refinance it. Now the amount of cash flow in your pocket is going to go up. So it's about protecting your assets and it's about your returns. So what about your assets and what about returns? This is a big concern that comes up for a lot of times. People are like, but Andrew, if I buy rental properties, what if something happens? Guys, really, what's going to happen, right? Can there be a slip and fall? Can something happen in a property? Sure, but that can happen anywhere else. Think about we're driving a 5,000-6,000 pound car or SUV every single day. Right? So when you think about assets and asset protection, the best thing you can do is protect your property properly with proper insurance, right? So whenever you're buying a rental property, you're not going to get a regular insurance policy. You're going to get a policy that's going to be 1 million liability policy. Generally, for a regular single-family home, it's going to be anywhere, depending on the area, of course, but it's going to be anywhere from about $400 to about $600, $700, $800, depending on the area that you are in, and that's all the cost it is. Now, as you start scaling up, you're going to start putting these properties in a LLC. And we put 5 properties per LLC. So that's called asset segregation and asset protection combined. Well, now let's talk about your returns a little bit. Well, what is a good return? Well, generally, of about 200 properties that I own, 1 or 2 properties are the only properties that I have any money out of my own pocket. Every single property makes $500 every single month, and it's an infinite return. Why? Because I don't have money in the property because I have huge equities, 30-40% equities. But if you're going to look at returns for you and you're someone that's getting started, the minimum cash-on-cash return that you need to think about, minimum, is 25 to 30%. That's a minimum, right? That's not a maximum. That's a minimum what you need to think about, up to 40-50% cash-on-cash return, meaning if you have $10,000 invested in the rental property, you need to see a $4,000, $5,000, $6,000 return on it if that's the down payment or that's the amount of money you have in the deal. So that is a good property. So we talk about 5 different things. I know it's a lot to cover in a short, brief video, but guess what? We have tons of videos like these, and they're absolutely free, right? We're going to give you a free gift with this video. It's called the 257 Cash Flow for Life. 2 years, 5 properties, pay them off in 7 Cash Flow for Life manual. It's 100% free. All you do is look at the description below, and you can download that for you, and there's an accompanying video that goes with that will be happy to send it to you. Guys, super excited about all these videos. If you're not a member of the Facebook group, which is Burr Cash Flow Investors, make sure you join the community. Lots more loads of content to come. Talk to you soon. Hey guys, I hope you enjoyed the video that you were watching. We make tons of free content just like this one. If you enjoy it, make sure you subscribe and click on the bell icon so that you're notified whenever we make the next video. As well, make sure you click on the next video that we have here. And please don't forget to share us with your friends. Talk to you soon.